Okay, I'm assuming everything is fine, so we can start this conversation. It's about an hour and a half, and we will try to keep this as minimal as possible and as short, largely because I want to dilute accountability here, and I don't want to be asking the tough questions, so we will decentralize it across the room. Thank you, everyone, for being here. Thank you for the organizer at CDPR, IGC, and other organizations for putting this incredible set of conversations together. We're sort of entering the policy side of the conference, so it's going to be more sort of practical, interesting, pointed question, and we will try to bring in a lot of academic literature and evidence over the years, which has been generated on tax questions in the country to really practical lights for South Asia. I can't think of a better panel to sort of put these questions to. So I'm going to introduce everyone quickly. Then Dr. Ijaz Nabi is going to give us a quick introduction, about 3-4 minutes of remarks, and then I will have quick conversations with everyone on the panel. We will move to Q&A, and Roberta is going to end us off with sort of really groundbreaking thoughts. So no pressure.
With friends like these?
You don't need enemies, right? Wonderful. So let me do as best of a job as I can do to introduce everyone. I'm going to start with Dr. Ali Cheema, furthest away from me, only spatially, but not emotionally, I'm sure. Dr. Ali Cheema needs no introduction. He's the Vice Chancellor of the Lahore University of Management Sciences. Is a long-standing researcher, one of the country's most prolific researchers, if I may say. Has worked a lot on taxation, particularly in property taxes, social compact questions. Is a co-founder of the Center for Economic Research in Pakistan, a senior research fellow at Ideas, and most importantly, brace yourself, lead academic for IGC Pakistan, which is really the pinnacle. Dr. Cheema holds degrees from Oxford, Cambridge, and Government College Lahore, and was a Rhodes Scholar and a Fulbright Scholar. So we're going to learn a lot today about Dr. Cheema's research and insights. Joining us from Sri Lanka is Murtaza Jafferjee, who is the CEO of JB Securities and chairperson of Advocata Institute. Investment professional, a quarter of a century of experience, was a director of the Colombo Stock Exchange, National Trust Bank, and Shernib Hotels. So really wide range of industry experience, and we're going to try to leverage that today. Is a CFA accountant by background. Thank you for being here in Lahore today with us. Then Sam, who I've known for several years. Sam Waldock is very, very new Deputy High Commissioner, Development Director at the British High Commission here in Islamabad. Was until very recently the Deputy High Commissioner in Zambia, where we worked together for a bit. Has had a very wide range of experience across the African continent, in Nigeria, in Abuja in Nigeria, and I believe also in Rwanda, but I could be wrong. And Malawi and Uganda and Tanzania. So we're going to learn a bit about the political economy of reforms and how do you actually take the technical bits into practical from Sam today, but also get the sort of the more development sector perspective. Very happy to have Dr. Hamid Ateeq Sarwar Sab from the Federal Board of Revenue today with us. He is a member of the Strategic Transformation Unit. Sounds an incredibly interesting title. Has served for 27 years in the Inland Revenue Service in the country. So we're going to learn a lot about sort of the practical tax administration expertise today. But what I really love, has received the Best Teacher Award from the DG of Directorate General of the Direct Tax Training. So maybe we can also learn something today from Then Dr. Ijaz Nabi, who is the Country Director for IGC Pakistan, is also the Executive Director for the Consortium of Development Policy Research, CDPR. Dr. Nabi has had over 2 decades of experience at the World Bank, worked in East Asia, South Asia, in DC, really wide range of experience, has worked extensively with the federal and provincial governments here. So we're going to, looking forward to your thoughts. And lastly, but not the least, Roberta Gatti is the Chief Economist of the Middle East, North Africa, Afghanistan, and Pakistan at the World Bank. Extensive experience in public economics questions. We had a great conversation yesterday on CDPR podcast. So you're in for a treat on that too. Has a PhD in economics from Harvard and studied at Bocconi before that. Excellent. Sorry, that was a mouthful, but I wanted to get everyone right. Dr. Ijaz, over to you to set the stage for us.
I'm just going to take a very, very short time to give a sense of how fairness in taxation is being thought about in the various committees that the government has set up to look at tax issues and other regulatory reform issues, to which I get called upon for one reason or another. So my sense is that the government looks at fairness from three angles. One is the systemic issue of fairness of taxation. In other words, we run up large fiscal deficits, in part because we don't collect enough taxes. That results in a balance of payment, well, a current account deficit, which quickly translates into a balance of payments crisis. And the solution to that crisis seems to be go to the IMF, devalue the currency, do whatever is needed to clear the markets, but inevitably the consequence is inflation. And the cost of systemic failure to collect enough taxes is then passed on as a generalized tax in the shape of inflation to the society by and large, and mostly the heaviest burden falls on the middle class and the poor. So there's that sense of fairness about taxation, that if you're not collecting enough tax, the solution to the balance of payments crisis results in an unfair distribution of the burden. So that's one way in which people are thinking about this. The second way people are thinking about unfairness is the unequal treatment of different economic activities. We know that, for example, that in Pakistan, the last 4 or 5 decades, the two sectors of the economy that have grown the fastest are real estate and wholesale and retail trade. And their contribution to total tax is very low compared to manufacturing and other activities. So this structural unfairness in the tax system is also something that the government thinks about solutions, but has not yet put forward a convincing way to address this structural unfairness. The consequence of this structural unfairness is actually is not very good for the economy, because investment is moving into real estate and wholesale and retail trade away from manufacturing, and therefore our exports to GDP ratio has gone down, and employment generation in manufacturing has gone down. So this structural unfairness in the tax system has also costs that need to be addressed. The third aspect of fairness is what we generally understand as fairness when we discuss the topic, which is interpersonal unequal treatment in taxation. And that also we know is substantial in Pakistan. We've got at least 1.6 trillion rupees that are left outstanding in terms of uncollected taxes. So the other thing that the government also has been worrying about and has been thinking about, and it shows up in these committees, is what to do about this. Essentially, if the problem is elite capture, which is why you're seeing this unfairness, these three types of unfairness, what do you do about elite capture? So far, I've seen two very clear attempts by the government to address the question of elite capture. One is fairly comprehensive tariff reform that the government has introduced. And very explicitly, starting with the Prime Minister and other cabinet ministers, it is said over and over again that we have been captured by some segments of the investment community, which has been very powerful and has gotten away with an undue share of government attention, which has resulted in a tariff structure which has given them a lot of protection, starting with the automobile sector, but also other sectors, and that this has resulted in poor allocation of resources in the economy, and this needs to be corrected. So tariff reform, the idea is that elite capture is essentially regulatory capture. So if you can do regulatory reform, you can address elite capture. Tariff reform is, if you look at, if the government does go through the 5-year program of eventually getting rid of all regulatory duties and additional custom duties, reducing the slabs, etc., is a very progressive reform. and will address the question of elite capture as far as tariff structure is concerned. The second regulatory reform that the government has introduced is in deregulation of various agricultural crops. At this time, the crop that's being addressed is sugarcane. Start focusing on deregulating the sugar industry, and that too is seen to be captured by sugar industry is apparently the largest, one of the largest segments of the manufacturing sectors. And the way the regulations have been structured for to ensure profitability to sugar mills is being addressed directly, and the government plans to do a fairly deep-rooted regulatory reform. The third area, of course, is how do you address regulatory, how do you go with regulatory reform as far as interpersonal inequality in taxation is concerned. And there we see some attempts, and I'm sure we'll hear a lot more about it today. We see some attempts at transparency and even having directories, taxpayer directory, transparency, empowering FBR to issue arrest warrants, etc. All of these are attempts to break the so-called elite capture of the regulatory system, which has resulted in these inequalities. I'm hoping that in today's discussion, we'll have some of these issues addressed by our speakers, especially by the person sitting immediately to my left. He is the fountainhead of knowledge about FBR and FBR reforms, and I'm sure it'd be terrific to hear from others also on some of these aspects of unfairness in taxation. Thank you.
Thank you, Dr. Ijaz. I think that makes my life really easy because you've just framed it really well. And I think, Dr. Ali, I think coming to you first, because this is very core to what you have been, the questions you've been asking. I think so the premise I want us to start with is that there are technical aspects to tax reform, and I don't want to understate that, and we will come to that in a bit more detail. Use of data, valuation methods, right administration, principal agent problems, all of this stuff, which are really important. But fundamentally, Pakistan's tax to GDP ratio is roughly the same today it was 15, 20 years ago, right? So it's about 10-ish%, give or take a bit. Looking from a political economy lens, thinking about all this resistance groups on each level of taxes when we think about, I would love your reflections on that. Like, what are the real practical constraints which you have studied? And I would love specifically if you can reflect on my favorite tax, not to pay, but to levy, is property taxes. Because that's something which is highly visible, it's provincial, it's where we can use it as a case study to understand how different aspects of technical and non-technical aspects can come together to think about reform. With that preamble, Dr. Ali, I don't know if your mic is working or not.
Hello?
Okay, that's good.
So let me take a step back because you're throwing me into the weeds, and I don't think it's going to be interesting for the audience if I get into the minutiae of property taxes and subnational taxes. We're talking about sort of the fairness of what? That's what I want to start with. And I think the problem is we always start with taxes. I think in Pakistan, there is a real problem of fairness in public finance. And unless we can get to the issue that the public financial policies and systems are giving rise to low trust in society, we're not going to take the agenda of actually implementing taxes very far, if that is indeed the agenda. So I want to just throw in two things in addition to what Ijaz was saying, and I'm a bit surprised that they're not being discussed in government. I think one big problem is that people are now starting to ask, as the tax bite comes in, that what are we paying taxes for? And there what we have to understand is that there is a very small proportion of people in Pakistan who pay direct taxes. a lot of the people who pay direct taxes actually reside in places where the government has actually abdicated a lot of the expenditure responsibility. So let me start by talking about cities because there's a spatial dimension of taxation. So if you look at cities, government investments in schooling and sort of higher education has effectively been privatized. Housing development has effectively been privatized. If you look at primary health provision, that's also largely been privatized. So the government invests in basically roads, it invests in a degree of security, but if you look at the household bills of city holders, they're effectively paying private providers for a lot of these services. So when the government comes and says, we're now going to actually tax you, the people say, okay, what is the compensating benefit that we are getting from these taxes? And I think that is at the heart of the problem. And in Pakistan, that problem gets compounded by the federal structure of the tax and the revenue assignment. Because a lot of the responsibilities for these expenditures have been devolved to the provinces, which are not collectors of these taxes, so they don't internalize the cost of these taxes. They rely on federal transfers. And every time you try and talk to the federal government about it, they say, well, you know, the 7th NFC has happened, the 18th Amendment has happened. Now all these responsibilities lie with the province. So I think that's the big challenge, and that challenge goes beyond FBR. The challenge goes beyond even the federal government. It is really a challenge of how do you sort of reimagine both what government ought to be doing, but also how do you rethink the structure of the federal expenditure and revenue assignment. Unless you can do that, I don't think what we're going to see is, and this is my prediction, I hope it doesn't hold true, that people who are in the net will be squeezed more and more because it's easy for the FBR to collect. You're going to see a lot of transaction taxes. What I'm very excited about is documentation and the use of technology to document. So you're going to see efficiencies over there. So the burden is going to shift in an unfair way on the already taxed, which is a very small proportion. And the trust with that segment is really going to decline because they're not going to see any compensating benefits. So I think if we really want a conversation, we need to open it up. But let me stop there.
Let me, we can sort of expand it. That's really important. And I think what you're getting at, there's also there's an expectation problem here, right? So there's a small population which pays much of the taxes. They don't get the public services, and part of it is a citizen sort of compact there. I'm going to ask you a very unfair question. It's like, if you are sitting in the government and you are thinking about this in a more holistic, all of government manner, what are the sequencing of things, or what are the main levers the government has which you can sort of think about in trying to fix this? Because it's a very hard vicious cycle challenge for them.
So I think one thing which I don't think it's only an issue for government, but it's really for political parties because it brings in the assembly as well. I think sort of rethinking the assignment of revenues between subnational provinces and the federal government. And I'm saying actually the opposite of what people think I'm saying, because everybody wants more centralization. I'm actually saying we need to give effective subnational tax bases to the provinces and hold them accountable to actually collecting from those subnational tax bases. That's, I think, something that is really important. I think effective local governments are extremely important if you have to deliver services to cities and you have to create those accountability relationships. And there I see a big piece for property taxes. But the problem is, even with property taxes, you can't push the agenda of property taxes if you don't effective, functional, accountable local governments on the other end, because that money is again going to go into the provincial centralized decision-making framework, and you're going to recreate the same problem. And then I think there has to be commitments around education, there has to be commitments around health, things that matter to households, basically, which are bearing the cost of taxation in some sense. So what are those expenditure priorities going to be? I think a lot of people know what those priorities ought to be, but that's not where the big push is coming in a meaningful enough way when the tax bite comes in. So the tax measures right now are stabilization measures, which is good for the first reason that Ijaz mentioned, but they don't take us towards building a culture around taxation or a political economy around taxation.
Great. Thank you, Dr. Ali. I think that's a really good framing about thinking about a more holistic approach to tax policy. I want to, Dr. Hamid, you sort of have a difficult job in some ways in, administrating this entire federal sort of tax infrastructure. So I wanted you to reflect on what Dr. Ijaz and Dr. Ali have been saying, but also talk a bit about where does FBR sit and what actions is FBR doing, given limitations of the mandate, right? So of course, there's things the FBR can't be responsible for on provision of public services or maybe some tax policy stuff. But on the purely administration lens, what is FBR's priorities? And it'll be lovely to get a bit of a insight into what I think Dr. Ali has also alluded to as sort of digital tools, because that can be sort of a catalyst for formalizing, creating information trail, which is really critical for tax policy.
Thank you. It's a fairly long question, but let me tell you something about what Dr. Ali was talking about, that our current tax to GDP or revenue to GDP ratio lies around 12.3%. In this 30th June, we calculated at 12.3 to 12.5%. 0.8% of it is coming from the provinces. And about 1.2% is again an aberration, which is the petroleum development levy, which is essentially my petroleum sales tax. But since the federation does not want to share it with the provinces, hence a separate arrangement has been made for that. And 10.3 was my collection, FBR collection, federal taxation, again 60% of which goes to the provinces, and which might be the reason why provinces are not so keen in collecting taxes. Whatever I've collected, it's about 12 trillion last year, and out of it, the good thing is that half of it is coming as direct taxes. 5 to 7 years before, it was only 33% of the federal tax collection. So now the income tax collection has gone to 49.5 or roughly 50% of collection. About 10% is coming from what Dr. Nabi was saying, tariffs, and the 40% is sales tax or VAT and FED, which is essentially tax on consumption. So this is the total breakup of taxes, and what we see is that we as a country, compared with India and other regional realities, can only go up to a 17% of tax to GDP ratio, which will somehow, if our expenditure is around 21% of GDP or 22% of GDP, the fiscal deficit will come into manageable limits where the multiplier effect is more than the crowding out effect. So roughly we need to move in very short period of time to 17%. Out of which, when we talk about FBR, it has not been given. We live in a fiscal federal structure in which provinces have a lot of powers of taxation, as immovable properties, the agriculture. So every tax base, income tax, agriculture income is with the provinces, non-agriculture with federation. On the sales tax or VAT side, all the services sales tax is with provinces, all the goods sales. So every tax base is fragmented between the federation and the province, apart from the external tariffs. And now we've seen that both Sindh and Punjab governments are trying to indirectly charge tariffs through these road cesses and other things. But nevertheless, our tax base on which federation levies taxes and collects taxes is not that big. It's not whole of the economy. Again, when we talk about the transaction taxes and custom, the 50% of indirect, so-called indirect taxation, it comes from everybody. So it is in a sense um, have some fairness and equity to some extent. It does not have a vertical equity, but it has a sort of horizontal equity in the sense that if even if an agriculturist drinks tea, he has to pay that sales. Ultimate sale tax is paid by the consumers. So its expanse is broad enough that we can say that they are distributed rather fairly. I'll come to the vertical fairness later on. But our income taxes do suffer from this vertical inequity, which is that people who ought to pay taxes are not paying that amount of tax. But coming back to the basic question which I was raising, that we can go to a maximum of 14%. So if I include the petroleum development levy, I'm already collecting 11.5%. So I have to collect only another maybe 2.5%, which will be maybe 20% more effort in federation. But the real problems are with the provinces. Their fair estimation, as World Bank has estimated, is around 3 to 3.5% of GDP is to be collected by the provinces. So that has to come from them. And you can see that our immovable property taxation yield is 0.25%. Our agricultural is even less. The major mover and shaker is this sales tax on services, which is contributing almost everything in the domain of provincial taxes. So one is that part of the effort or huge, they have to, from 0.8 to 3% is 4 times jump. I only have to improve by 20% to reach the ideal, the maximum, the optimum level of taxation. Now, coming back to the taxes we collect, the tariff of Dr. Ijaz Nabi has already talked about. The real sort of inequity there was the fifth schedule, which with his efforts and with his colleagues, government has agreed, and as well as IMF pushed us and World Bank pushed us, and we've agreed that we'll reduce the tariff.
For once, we pushed more than the IMF.
I was.
So they pushed and IMF supported them, and hence
We all push together.
yeah. So we think that we have solved that problem, but I see Dr. Ijaz Nabi in Prime Minister's meeting opposing the so-called the rich getting relief by auto sector. The 11 crore car is now selling for 8.5 crore. It's still 8.5 crore, but the government is not happy with the optics and wants to levy RDs on that. But that aside, I think that we are on the right path of that horizontal equity on that side. Once we remove these special treatments, special lower tariffs for certain sectors, it's not continuous elite capture, it is elite capture at one point of time, and it is very difficult, very easy for the businesses to somehow retain whatever they have got, and quite less effort is required to maintain the status quo. But I agree that at one point of time, elite capture does appear, and it gets so many benefits from there. So hopefully by 28 or 29 will be, and it was top loaded, thanks Dr. Ijaz Nabi. And so we have actually done 45% of tariff reforms this year, and we are going to do 55% of the tariff reforms in next 3 years. So that might address it. I know that whenever current account balance hits our first priority is to levy RDs, so I don't know whether we'll remain on that path or not. On the sales tax side, the real problem is horizontal equity. So the VAT, if in Neela Gumba there are tire shops, let's say 100 tire shops, 10 of them are registered with me as sale tax, and inclusive profit if the cost or sale value of tire is 100,000. So a compliant taxpayer is going to fix its price at 118,000. and a non-compliant 110,000. So there cannot be two prices in one market, because this one, the lower one will sell and the higher will. So people actually face this problem of extinction, that they will have to close their businesses if they comply with our taxes. Hence, this issue is real, and people have to somehow, I do not condemn them, buy those flying invoices in order to remain in the business and remain in the market. So that challenge is being addressed by the digital things that were pointed out, that now we have a point of sale system, the digital invoicing, the production monitoring in almost major 12 sector is going on. It's now a hybrid model with digital and persons both sitting there. Physical monitoring is also being done. We are now sitting at 400 places, business premises, and we have now in final stage of forming the central control unit, which is although there is a mechanism available of issuing red flags and other things. But nevertheless, we have started from the top, coming down, trying that everybody of the same volume of business or some same value addition should be hit by same amount of taxes, because it will only push the budget constraint on the inner side and will not change the preferences of people, and that will reduce, although distortions will be there in economic terms, but it will reduce the distortion. So this is our first set of activities. Again, the details are too much, I'll not dwell into them. On the income tax side, I have this vertical equity problem, which was pointed out, that maybe trillions of rupees are not being paid by the people who are at the top 5 percentile of people, and their tax compliance is the least. They are only 13% compliant, and the rest of in the middle we have almost 70-80% compliance. But the real issue is at the top 1% and top 5% of people, who somehow get classified into the lower portions of the income earners and pay a less amount. And this is even anecdotal evidence supported, that the maybe I don't want to take names, but a trader of Badami Bagh will be gathering 20 persons and taking them to Japanese restaurant. And if you look at his income, it might be lower than my income, and I cannot think of going there. So we're trying to address it through the high net worth individuals. We've identified impossible returns, the gathering data from the travel, from the property purchases, from the car purchases, and other lifestyle things, and trying to match them through AI with the return numbers. And when we move forward, I'll tell you that we're doing a lot of nudging and a lot of media campaigns and other things, which you will be seeing in next 15 days, to somehow introduce that fear that FBR knows. And according to a Lingham stand model, the certainty or the probability of being caught and certainty of penalty, that is the perception of it, we are trying to increase, so that this sort of horizontal and vertical equity comes into the tax.
Thank you. Thank you so much. That's a really comprehensive, really good overview. I think one takeaway is that I think we probably should have had someone from the provincial government here, because there's lots of fiscal framework issues here. But great to hear all this sort of range of commitments, from policy to administration to high net worth individual data triangulation. So I presume FBR can get to that 3-4 percentage point increase in the next few years?
Yeah. We are bound by IMF to do that, so we are going to do that, because every time we take a step away, we fear that this installment, which comes after every 6 months, will stop, and our current account issues are somehow, and these are good times for taxation. No politician is opposing anything, and whatever we want to do, we are doing. So sometimes these are rare opportunities, and we are trying to maximize this opportunity which we have got.
That sounds great. And course, this makes the point Dr. Ali and Dr. Ijaz were saying about the politics and the public service linkage ever more critical. So, especially if there's expansion of tax net. I think, speaking of IMF, Murtaza Saab, I think this is like a good time for you to come in and also for us to broaden the conversation to South Asia. My assumption is, I'm not too familiar with Sri Lanka, but there will be similar fairness concerns, progressive taxation concerns in the country. And then Sri Lanka has also gone through a sort of a difficult economic period of the past few years, some similarities to Pakistan with the IMF program, with the debt restructuring, credible commitment mechanism, which has been put in place. I would love for you to give us a sort of a brief summary of what the tax system in Sri Lanka looks like. What do you see as the big sort of concerns around fairness, perceptions, on how that kind of social compact can be built? And sort of we can generalize some lessons for the region from that.
Yeah, thank you, Shahrukh. Let me give you a context. Sri Lanka suffers from the same ailment as Pakistan, a love affair with the IMF. We have gone 17 times. I believe you have gone 21 or 22.
23.
20.
Congratulations, guys.
Right. So Sri Lanka is a $100 billion economy with a population of 21.7 million. And its per capita GDP is about $4,000. So what happened is there was a change in government, and around about November or December 2019, they decided to reduce the VAT rate by 50% and reduce personal income tax with the belief that it could stimulate economic growth. By March 2020, there was a lockdown in place. There was a dramatic contraction in economic activity, and the debt structure of the country had about 50% external debt, of which about 60% was commercial, including a lot of listed Eurobonds. So the government basically was made to believe that it was a problem of liquidity and not solvency. So they were in denial for about 2 years until they finally defaulted in May 2022, when usable reserves were a mere $20 million. So we ended up with a very deep shock where inflation was as high as 70%. And the 17th IMF program came to be. So before the IMF program, our tax to GDP, which 25 years ago used to be 20% of GDP, had come down to 7.2%. So today it is back at 14% of GDP, and total revenue to government is now in excess of 15%. Now, historically, indirect taxes used to account for 80% and direct taxes only 20%. And last year, the direct taxes had gone up to 28%. Now, it's expected that this year, the indirect tax component is actually going to go up, because one outcome of this deep financial crisis, because of a shortage of foreign exchange, they banned the import of cars. And Sri Lankans seem to have a love affair with their cars. And although in the current regime, cars are taxed between 130 to 250%, they are estimating with the revised taxes that they can collect 1.2% of GDP. So what has happened is that because of widening the VAT base and imposing taxes on fuel, another interesting parallel I have seen is that both Pakistan and Sri Lanka play politics with fuel prices. I think India got out of this in 2013. And incidentally, Nepal has one of the highest fuel prices in South Asia, being one of the poorest countries. So I don't know why these two countries have an affliction with fuel prices, when many studies have shown that 70% of the benefit of lower taxes go to 30% of the richer households. So the politicians have been promising to rebalance the tax base to 40% from direct taxes and 60% from indirect taxes. But it's a tall order. So with regard to progressivity, 10% of the richest households account for 36% of income. And the poorest 10% account for something like 1.2%. So it's about 50% of national income is from the top 20%. And some studies show that the top 1% control 40% of the wealth. Now, one of the questions that was put to me earlier was about property taxes. So, as you know, property taxes is a subnational taxation and they collect about 0.2% of GDP. It's mainly coming more so than rates, it's coming from stamp duty. So it's on the transfer of property, which is about 3%, and then above a certain threshold, it goes to 4%. Now, property taxes is a great taxation because it adheres to the principle of subsidiarity, where you can delegate further down. And I think there is a greater feedback loop between taxes you pay and the services that you get. Now, in the case of Sri Lanka, what happened was that they needed to boost central government taxation. So the IMF suggested an imputed rental tax. And what they said is that you take, for example, 4% of property value as a rental, and you apply about 25% rate to that 4%. So that would come closer to what your personal income tax rates are. And the justification was that, why are you advantaging property over other investment classes? And being an island nation, there is a behavioral bias towards real assets to property. One is that we have also been characterized by very high inflation. So real assets was seen as an inflation hedge. But the tax system was advantaging the acquisition of real assets. And your primary residence was also exempted from capital gains tax, which at the individual level is only 10%. So the other recommendations were that to have a digital sales registry and to move away from stamp duty, which is more volatile, to a more recurrent stream. So there has been a rich set of measures that have been taken, which basically is attempting to move towards a more progressive band. And I think there is a second round where I will shed more light.
I think that's maybe if you could reflect slightly more on they sound incredible measures, and I think there's a lot of reflection on I think fuel subsidies, the investment class of real estate being sort of more incentivized, and I think that's very similar to Pakistan. What other kind of constraints are like the practical constraints the government is facing in which sort of they're undertaking these actions?
So one of the things is that the willingness to pay taxes because of the extent of the crisis has significantly improved. The first time people have realized that not paying taxes has a far, far greater impact than avoidance.
Interesting.
Right? There is also the socio-political context. There was a change in government. And the change in government was centered mainly on corruption. Right? So people's willingness to pay taxes is highly predicated on them seeing that there is better governance. As Professor Mick of Sussex University says, in countries which pay taxes enjoy better governance. So there has been a lot of background, and interestingly, the IMF has done a governance diagnostic assessment on Sri Lanka, the 17th country, the first country in Asia. The second country in Asia is going to be your country.
Already done.
Already done. I believe the person who was doing it, Joel Turkowitz, said in August they were going to, I was looking to read the report before I came here. So I believe you have to release it, right?
The report is not
Report is not released, drafts are being exchanged with each other.
Okay. It was a game changer for Sri Lanka because it gave a lot of insights. So in terms of the context, one is people's willingness to pay. That is more important than all the other steps that you can take. But like in many other countries, there are exemptions are being reduced, more digitization, and even potentially what is called the common reporting standard. That globally it's very difficult to hide your assets because lots of countries are adhering to the common reporting standard. Sri Lanka is not yet a signatory to that, and it will probably be forced to be a signatory going forward.
Thank you very much. That's really interesting, and I think we should unpack that in the Q&A in a bit. I want to come to you, Sam, to conclude this sort of round of questions, and then if we're going to the audience here. I sort of two sets of things would love your reflection on. One is, of course, there's a role the sort of development sector plays in this question, and it has been a sort of long-standing role for decades, and FCDO and DFID have been part of that, but also other actors. So from that side, it'll be interesting to get your reflections on how you see and what kind of support is most useful there. But the other question I had was more about also the political economy, given that you have worked, well, not in the region, but in Africa a lot on how evidence and sort of desire for reforms get actually translated to actionable reforms. So get your reflection on how that sort of pathways can look like and any sort of lessons we can extract from your experience.
Great, thank you very much. And just to say, it's brilliant to be here. We really value at the British High Commission our links and relationships, partnerships with academia. So great to be part of this and always keen to engage. So look, I think as a development community, we share the analysis, essentially. We share the analysis of the problems around the scale of taxation, the distortions, and also the kind of questions of provincial versus federal. And I think we also share the analysis around what underpins that, which is politics and political economy. So I think there's a real kind of consensus on those issues. And I guess the question is, what do you do about it? And how do development partners engage in this? What is their role? So I think the first thing to say is, for me, starting with a recognition that politics matters in this space is half the battle in a way. Because it hasn't always been the case that we've recognized that political economy is central to these questions. And of course, we all know that if you ignore the political economy of reform, it's a really great way to waste a lot of money and a lot of energy on things that are not going anywhere. So I think we've made some progress in that. And I think the IMF governance diagnostic is a really good example of the way that the international community is starting to think much more deeply about politics and governance questions that underpin this, even for institutions that are apolitical. So that's really good. So then how do you engage once you recognize that politics matters? Well, I think probably three things. The first thing is, I think what we do as development partners has to be demand-driven. And that's hard because we all see the issues. But there are better or worse ways for development partners to then operate to kind of go with that. So we see in Pakistan, it's quite cyclical, as Ijaz mentioned, and so these windows do emerge. And so development partners that have got an operating model that's very agile, very quick, very responsive, are often able to capitalize on these windows and make progress, lock in progress step by step. When you're slow or focus too much on programs, not reactive enough, then you often don't. We've also learned that if we're working with a kind of very demand-driven model, that actually a lot of tax authorities are quite centralized. And so engaging at the top really matters. So we often think about delivery units, steering committees at the top, but having kind of some structure to kind of fix things, move reforms forward during those brief windows is very important because there's no kind of time to sit around during these reform windows. And then finally, because the politics is always changing, it's really important we kind of fail fast and move on. And it's easier almost to start things than to stop things, but that's really the trick. So I think where there's a window of reform, I think we know what to do, but I think a lot of development partners are still trying to shift their operating models to be better at maximizing that. And that's a real value for money question for us. The second thing I'd say is where we have a good demand, then we can bring in a lot of technical expertise. This is a global challenge. I don't know any country in the world where citizens particularly want to pay taxes. And so there is a lot that we can learn from each other in terms of how to do this well. And so we've seen, for instance, in Pakistan recently, where there is a bit of momentum on this, we've been able to do quite a lot. We've put in support to FBR, which is simplified tax returns in both Urdu and English. Hopefully those of you who filled in your tax returns this year would have noticed that I think we've gone from 854 to 8 boxes in terms of pre-filled boxes. There's work we've done here on compliance with compliance dashboards, again flagging up those who might not be paying tax. We've heard a bit already about the work we've done together on AI and how we can save hours and hours of sort of manual work by employing these tools. And there's generally quite a lot to be done there. And then also, of course, tax is global because money moves around. And so when we have automatic exchange of information, we plug our work on tax into these global networks, we can start to actually identify leakages. So when there's demand, there's a lot that can be done, and it can be quite technical, but it can move things forward quite fast. The last thing I'll cover then is what do you do if there isn't demand, or if there is stated demand that doesn't then follow through. I think this is where development partners have to be much better at walking away. I think this is what a modern development partnership looks like, and failing fast. But I think there is also something, we think a lot about the idea of mutual accountability, where we kind of approach our partnerships with a clear offer and a clear sense of where we both want to go together, and we keep doing it for as long as it works, and then when it doesn't work anymore, we stop it. And I think having those models that allow us to do that, I think are very important. And then finally, I think there's a piece around kind of what are the ultimate drivers of change, and I think our core contention in any country is that change is domestically driven. It's all about the domestic political economy. But some of these global frameworks, the IMF, they do shape the game. And that's also why for us partnerships are really important. Partnerships with the International Growth Centre, with academia, organisations that are shifting the debate, are thinking about challenges in the country are really important. So I think we have got better as a development community at managing the kind of politics of reform. I think we've still got some way to go, but it does start with that real sense of being really grounded in the political economy, grounded in the context, and then quite realistic about what development can do and not do as a tool to leverage change.
Thank you, Sam. That's super useful. And I think I want to now go to the audience before Roberta is going to give us closing remarks. So I think there's sort of this is a really rich area. There's multiple dimensions to this, and we've spoken about, to my count, like several, but like 4 key ones, right? So there's what are we paying the taxes for? So the link with public services. What fiscal framework is in place and the incentives it sets, like with provincial governments particularly, and that's a sort of fiscal federalism issue is a big one. We spoke about sectoral composition of tax obligations. So are some sectors like property, agriculture under tax systematically? There's of course a macro linkage to that or implication to that. And then final set of things we've spoken about is administration of tax policy, role of data, role of policy windows, role of different kinds of actors like development sector, and how different people can work together to look at a window and really shape reforms and how to sequence that. But there are many other questions we haven't spoken about, so let's open it up to the audience. And I'm going to start with the gentleman there. And then we will come to the gentleman here. Maybe they don't have a mic, so maybe you can start us off. If you can introduce yourself quickly and then.
Sure, I'm a professor of computer science, but I'm not here as a professor of computer science, but I'm owner of a small startup. Okay. And I'm going through all those taxation issues that you're mentioning about at a very small level. My question is that when we calculate our tax to GDP ratio, do we also include the cross subsidies that all the businesses have to pay? Do the business have to also do the compliance costs, litigation costs? Because that's also something that's going out of the business world, and that's a significant cost. If we add that, I believe probably our number of tax to GDP ratio is much higher than that. But my question is that if we are going towards a very, you can say, on steroids, we are trying to increase our taxes. But my fear is that in this all effort, we lose out the business that is paying the very taxes. So if the business is not going to be there, how are we going to tax collect from? Because business is only possible when there are conducive policies, there are policies that can that can help survive the business. My small startup, I mean, we are at a point where either we can close down, or we remain in cash, or we move out of the country. And I know that there's not been a single startup in the hard tech world that has come out of Pakistan in the last 20 years. Tell me a single name because of the issues that we are facing in this.
Do you have a specific person you want to direct this to, or generally?
In general.
Okay, so we're going to take three, and then anyone can volunteer, and I will do a summary before. The gentleman there.
My name is Hassan. I'm a tax practitioner. I also happen to taught at the DOT, which is the Training Academy, FBR, for about 8 years, CSA, NEPA. And bit of background is that I'm currently involved with LTU, and I'm there on legal panel, and I'm representing multiple cases. I will just bring 3 points out and highlight those for the panel. One is the point that is echoing around the hall is the word squeeze. It's not as easy as it seems. If you squeeze the taxpayer, they have an option to go to the courts. There are about 12,000 in just one zone pending litigation in courts like tax tribunals and high court. So the idea that it's very easy to open the tap and the taxes will flow is not going to work. Nobody's looking at the other side of the window, with the other side of the table, which is the tax collector themselves. They are marred with inefficiency, capacity building issues, morale, and the ability to actually tap into the tax resources due to political and other reasons. So it's not as easy as it is to squeeze them and the tax will start flowing in. The other point is, which is a very critical point, which we've touched upon, is touching the federation structure that we have in our constitution. It's very simple to say, let's do away with 18th Amendment. Let's give all the funds back to the federation. Let's not give it to the provinces. There was a logic and a history behind going through that exercise. If we touch the federation, we are a federation, which means that we also represent people who are not represented here, i.e. Balochistan, Gilgit-Baltistan, AJK, FATA. There are multiple federation units which combine. If you take these resources back, it's very simple to say, the federal government will not lend it out because to the ones which are starved.
Excellent. I'm going to stop you there. Constraints in time. Gentleman there, and then the gentleman here. 30 seconds. Clear question.
Assalamu alaikum. I want to ask the question that yesterday I studied that the Pakistan total public debt is 280 billion USD, and that is in Pakistani currency it is 80 trillion rupees. Will Pakistan ever be able to pay this tax?
Okay, excellent. Very good question. One final, and then we go to the panel. We will come back again.
Great conversation. I am Ijaz. Floods. This is concerning floods. In 2022, Pakistan suffered around $30 billion loss in the floods, and this year it is expected to be $60 billion loss. So inflation will go up, and how FBR will going to meet those taxes targets?
Okay, excellent. Let's do a very, very quick round of sort of responses, whoever wants to go. So we have a set of questions around compliance of firms and the squeeze firms face with sort of this desire to increase more taxes. There's a certain, that links to this broader question of how to make environment conducive. There's a question about litigation and the role of courts into sort of into this mix. Question of federation. We've sort of been slightly critical of how provinces have been able to raise, but of course, sort of the wider political economy of the federation. Debt, and then the impact of floods. I'm going to start further structurally and then come here, and you can respond to one, all, but
I'm going to respond to a couple of points, not to a couple of speakers. So let me start with Naveed's point, which I think is a really valuable point. Hamid started with this notion that there's a benchmark tax to revenue target, which is 17%. Why? You could say that, look at Bangladesh. Bangladesh collects roughly the same amount of taxes that you do, but it has social outcomes which are far superior to Pakistan. So the 17% becomes justifiable if you can tell us that the public investment dividend that the country will receive in terms of growth and in terms of social development justifies that 17%. Otherwise, you're going to get into this cycle of squeeze, and that's the whole thing. So the tax policy has to be matched by an expenditure policy. And adding to that, I think what Naveed is saying is actually really important. I keep hearing this phrase that all incomes are equal, so they should pay the same dollars. Yes, in a fairness sense. But we know that sort of in growth terms, it's not necessarily the case that everybody should be paying the same amount. If it's unproductive rents, you can tax them without having efficiency consequences. But if you start to go and tax elastic labor supply, that's going to have huge consequences. Currently, Pakistan's tax framework does not have a growth framework aligned to it. It's a pure and simple stabilization exercise. And I think that's the first thing. All these reviews, all these reports that are happening, show me a report which is telling us what the path of growth should be. So I think that's pretty critical. On the federation point, I just want to make a clarification, which is I think it is really important to rethink the federal revenue assignment. I am a big supporter of the 18th Amendment. I don't even have a problem with the 7th NFC. I can think about some expenditures, particularly around debt, where there has to be a federal fiscal arrangement. But I think the tax assignment is very problematic because, and there I agree 100% with Hamid, there was a colonial artifact that you broke the income tax between agricultural taxes, made that provincial, and other income taxes are federal. So you have these divided bases. I think it is time to do two things. One, we need to think about shared bases, which happen in a lot of countries. I think that the big dividend for taxation is going to come from the VAT, provided it is actually implemented in the VAT mode, which it is not. So how do you create that framework? That has to be readjusted. And the third thing, which I 100% agree with, and that's kind of my passion and my work, is around property taxes. But what is happening with property taxes now? The federal government is actually encroaching through 7E on a subnational base, which is undertaxed basically by the provinces. And I'll tell you what the knock-on effects are. City flooding is a huge issue. Karachi effectively drowns because you don't have effective infrastructural investments. The same is going to be true of Lahore. It's already started to happen and so on. So how, if you think back into history, how did these cities create these infrastructures around sanitation and sewage? It didn't come only from recurrent property taxes in the sense that direct taxes paid for this infrastructural investments, but robust property tax systems actually allowed you to issue bonds, which then raised the money because it became a source of income, which allowed the investments to happen. So when you don't have that framework around your metropolitan cities and your high growth cities, then you're also killing the income potential of those cities to raise debt against to make those investments. And I think that framework, if you really want to tackle climate change and urban flooding and smog, if you don't make those jumps now, and thinking about sort of environmental taxes, particularly around smog and so on, pollution taxes, within the framework of cities, it's not going to happen. Where is that framework? There's no discussion around that framework. So three frameworks, one around expenditures, one around the growth potential of revenues, and the third is around this governance, which is tied to public investment financing through incomes of localized units, which could actually be responsible for their delivery. I think this would be a rich policy agenda.
Great. Thank you so much, Dr. Cheema. Murtaza, I know the questions were really biased on Pakistan's context. So any reflections quickly on any of them?
No.
No. Perfect. Sam, I think you probably do.
Yeah.
I was just being democratic.
There was a question about tax compliance cost, and I agree that compliance costs are huge. We have withholding statements and returns and monthly returns and quarterly returns and everything. What we have done is that we have made them online. Hence, the cost of physically going to the offices is somehow curtailed. The need for a lawyer, we want to do away with it. We, with the help of FCDO, have developed a simplified return, as he was telling, 852 rows now reduced to 8 screens only. So we're trying at best and if you, I tell you, like in US also, 98% of taxes are collected through voluntary compliance, only 2% it comes from audit. And likewise in Pakistan also, the enforced collection, so-called, is about 2%. It's 90% voluntary compliance. And in fact, we're doing a lot to increase voluntary compliance. People should, the best taxes are those which are paid by the people themselves in their returns. And that will reduce the sort of litigation which was pointed out, that litigation is that 2% or 3%. We hardly do audit of 1% cases, less than 1% is our auditing. There may be, so I have about 23,000 of workforce, so everybody is sitting in every corner of the country. So maybe some malpractices are going on, which are being pointed out by IMF governance report. Also, we're trying to tackle that. But the real method to tackle that is making it easy directly. People filing through, we have e-filing since 2007 for corporates and for non-corporates 2030, and probably we are the only country in the region which started so early. Uh, Nevertheless, we know that startups are not coming up, but I had a tax exemption of 5 years for startups. We have the lowest IT tax rates, and still people are happy to receive money in Dubai or Saudi Arab, and they are not bringing money to Pakistan. It's hardly a tax, 0.25, 0.5 is the tax. So it's not only the tax policy which has come into play. I know our personal taxes and corporate taxes are very high. In fact, we've gone beyond vertical equity when we are taxing banks, let's say at the rate of 53%. This is 53% is too high a rate. Nobody will like to work in Pakistan. In corporate side, the maximum rate goes to 39%, which is 10% of super tax and 29% of the tax. Nobody will like to work. The regional rates are around 25, 26%. So we need to move very quickly to this 26%. On individual side, we have a 45% tax, and again, it can be another 10% can be added as surcharges. So we have got very high rates, and that was because of the program commitments that we had to, because we could not expand the tax base, so we had to increase the rates. But it is even our 18 plus 3% of VAT tax is bad. It has to come down to, we were in China, they have got 13% of it. Maybe in 3 years' time, we can come down to 15% tax rate, which will reduce the rate of the cost of compliance to some extent. But things are not that bad. For the first time, we are going through an IMF program or reforms. From last 1.5 years, you can see a rather stable exchange rate, which cannot be artificially. For 1 or 2 months, you can say somebody is somehow pushing this, and this is happening. Why the inflation rate has come down so low? Maybe it's a recession, a stagflation. I don't know what is happening, but now I'm facing as a tax manager.
Good monetary policy.
Yeah. So we brought this again. The good monetary policy also 22%. We brought it down to 11% now. So we have halved it, and but these three things: the macroeconomic stabilization of low interest rate, lowest inflation. Last month we clocked 2% of inflation, only 2%, and it was in June 24. It was 24%. So no country has seen this much macroeconomic stabilization. What is not happening, Dr. Cheema pointed out, our LSM growth is minus 1.9. So that is something to worry about, and that might be the reason. The reason might be the total disconnect between the taxation policies, even the monetary policy, and the growth policy. So we know that we are facing this problem that the development partners and IMF is not happy when we go beyond 4%. So the policies are in fact also pushing us to remain within a certain band of growth. But now growth is bothering us. We initially started this year with the assumption of about 3.1% of growth and 9% of inflation. I'm not seeing inflation going beyond 5 or 6%, 7% at max this year. Things are not looking that good. We squeezed the property sector, Dr. Ijaz Nabi said. Last year, the transaction in properties went by 30% down from the previous year. We squeezed these retailers also. The tax collection from them in 24 was 312 billion, and this year I collected 568 billion from them. So we are taxing them now. 18% tax contribution, the GDP contribution now, tax contribution has come to 5 to 6%. So what I'm trying to tell you that things this time are not the same as any. I've gone through 6 or 7 in my service, 6 or 7 IMF programs, but this time things are looking different. For the very first time, we increased the tax GDP ratio in one single year, 1.5%. We were at 8.8%, and we increased to 10.3% only on FBR revenues. So things are changing, but somehow maybe there is a problem that whenever we go for macroeconomic stability, the growth goes down. The growth is now the real problem that we are facing, and we are now becoming so desperate that we may need to open up the construction and real estate sectors, because somehow not the stock exchange is working properly in Pakistan. So a middle saver of 5 crore rupees have nothing to go to. He cannot open up a factory, he cannot go to stock exchange. He is going into this cryptos and other things, and maybe construction might be some now a better option to somehow bring this 37 trillion rupees which is lying idle in Pakistan back into circulation of the economy. But nevertheless, these are real problem. In capacity building, I'd like to point out we have now hired about 2,200 chartered accountants on contract basis in FBR, and they have joined there. So we are addressing this capacity. We have now system experts, the sectoral experts, about 200 of them are being recruited. I'm doing the interviews right now. And similarly, the law firms are being engaged. So we are conscious of the capacity problems, are going to address it also.
Sorry, Dr. Hamid, I will pause you right there because we have 10 minutes left, so I want to do a quick 5 minutes round of Q&A and before 5 minutes for closing. But I think there's an important question here about moving from stabilization to growth. And I think there's mistakes Pakistan has made before when that move has happened, and that has sort of fed into structural issues in the economy. So thank God there's an international growth center sitting next to you who can help on that question. Okay, gentlemen there first, and then we go to these two questions here, and then we do a closing with everyone.
Hello, sir. I'm Wajahat. I'm a graduate student in Lahore School of Economics. So as far as my humble question is concerned, so I have overcome in my study, there are 4 main problems the FBR is facing. The first problem is that the documentation, the volume of the documentation is very high as far as the ordinances, rules, and statutes of the FBR is concerned. The second is the overstaffing, and that has been even tried by the Dirin chairman Jafferjee to lay off the huge number of staff up to, I think, 13,000, so that the rent seeking and the the corruption can be overcome. The third is the compliance with the tax administration. Is Pakistan take about 577 hours per year as compared to the world standard of 108. And the fourth is there has been a huge opposition when the policy reforms came from the members of the board of directors at the FBR. Thank you.
Okay, thank you very much for that. Okay, question. Ended with a question mark. So very quickly, 30 seconds. These two gentlemen there. And then the gentleman there, but very quickly.
Sir, I want to ask about the possibility of huge brain drain that might be happening or might happen in the near future because of the punishing tax rates we have for the salaried class. So your views on that?
Gentleman there.
Right. I want to talk about the NFC and the 18th Amendment. I think we can agree that it was a movement in the right direction, right? But 15 years on, maybe we can think that it's not doing enough to incentivize the provinces to collect enough taxes, right? And there's a fairness concern involved as well, as Punjab gets significantly more resources than the other provinces. So how can we, looking on, reform the NFC to ensure more equitable and fair, tax structure across the country?
Right. And the final question for the gentleman there in the bluish shirt. I'm sorry, we have to conclude then.
I think as FPR is confirming a disconnect, which Dr. Ali said, that between growth policy and the tax policy, and believing that IMF, as Sri Lankan experts said, in the recent round has been like involving the citizens. So what has been that richness of that round, that which actually has addressed this gap, which Dr. Ali has said and FPR has confirmed? Said, what is that richness? And is it demand driven, as our expert from UK has said? Is it demand driven, or is again an elite or cartel driven?
Thank you very much. My apologies. I think we have to go towards concluding the discussion here. So this is what I'm going to suggest. I'm going to start with Murtaza, yourself, and Sam, Ali, and then Dr. Hamid, you. Quick, you can sort of circle in some of the questions. Quick 3 things maximum to conclude. Yes.
Thank you. So in the Sri Lankan context, I think the governance diagnostic is something the country themselves requested. And that was something that the IMF had been doing for 10 years or so. It has had a significant impact because it has provided a framework of how to think about the problem. So the governance diagnostic will look at 7 areas: fiscal, monetary, SOEs, the judicial system, and 1 or 2 others which I forget. So, I mean, when you have a contextual framework of how to think about governance issues in a country, it provides a very rich source for a national debate about governance, because I think in most countries that have very low taxation, there is a reluctance of the citizens to pay because they feel there is governance failure.
Excellent. Sam, do you want to have quick reflections based on the questions here?
Yeah, I mean, I think it's been really good discussion. I think there's a lot of consensus, I think, on the issues here, which is interesting, and then it's about what you do about it. But I think there is a consensus that there are some good opportunities right now, and I think that it's important we don't waste the moment we have right now, but also that we need to keep pushing through that link to growth, particularly. And then I think another thing that comes back more and more is just the importance of consistency. So this is a good start, but actually what's going to make the difference on many of these things is kind of pushing through all the way through to full implementation. I think we started well, but there's still quite a long way to go on that. And I think this is where development partners will continue to be very engaged and supportive.
Perfect. Dr. Ali, I feel like I was going to... Dr. Hamid, I feel like I apologize, but this is a consequence of the job. There's a lot here. There's stuff about organizational culture for FBR. There's brain drain. I don't know how you sort of would be held accountable for that. NFC, 18th Amendment, the sequencing reform. Any sort of what are your quick thoughts on all of this?
So first on NFC, you need to understand the federal problem. The federal problem is this: if we collect whole of the 14 trillion that we have set as target of FBR, we'll only get 6,000 out of it. So 6 trillion will be our share. Add another 2 billion from the non-tax revenues, the PDLs and the government profits. So we are left with 8 trillion rupees in real revenues. And our expenditure is 18 trillion. So we are bankrupt from the day one. So things need to change. 9 trillion will go to debt servicing. So it's not the federal government which has taken debt. It has been spent on the provinces, on the dams and other things. It's a wrong perception that somebody has taken loan and put it in the pocket and ran away. It's not the case. To understand the problem, 6 trillion versus 18 trillion. 9 trillion is your debt servicing. 3 trillion is your defense expenditure, which cannot be curtailed, not because the army is in charge, but because of the fact that this is the minimum that we need to have to survive in this region. So rest of it, the federal government salaries, you can fire all of them. but you'll save 1 trillion.
You heard it here first, guys.
This is the real issue. Federal government needs more money, or the debt service expense has to be shared by the provinces. So the debt is not that big. So we might be having 80% of debt to GDP ratio, or 70% is coming down. But luckily, only a part of it, maybe 1/3 or even less than 1/3, is foreign debt. Most of the debt is the domestic debt that the people have given to us. So debt is not the real problem. Maybe the real problem is in the growth that we should have. We should have more. The pie size should increase from 380 billion or 385 billion dollars of GDP now to maybe 600 billion dollars at some point of time in very near future. On the tax side, again, I've told you that things are happening, things are changing, we're trying to change. Obviously, it will take time. We are going for this, the e-bilty phenomena, in which we are going to, there are 3 value chains which are moving. One is the invoices value chain, one is the money value chain, one is the goods and services value chain. We're trying to map everything digitally. It will take time, because India has done it in 7 years and Turkey has done it 10 years. So you have to be patient, and somehow the focus should not change. And the other thing is that these divided bases need to integrate itself. And Germany has a simple formula of NSC ward. They collect taxes at provincial level, and then 45% goes to the federal government, 45 to provincial government, 10% to local government. So it can be that easy if we do it properly. Otherwise, fragmented tax base, we are the only one country left in the world, on the map of the world, which has this services and goods sale tax separate. India did away with it in 2017 through constitutional amendment. So things need to change from quite a lot of fronts, not only in FPR. Thank you.
Thank you very much, Dr. Hamid, about a very honest reflection, and I think that's really very, very valuable. I want to, Dr. Ijaz, very quickly on the floods. And
very
then
quickly on floods. After the 22 floods, an international mechanism was put in place where countries could appeal. Countries that were, the receiving end of world emissions and the consequences of emissions. The government, you will have seen in today's Dawn, there is a headline in which PPP has questioned the slowness of the federal government in moving to appeal to those funds. But just 3 days ago, the government decided to impose a floods levy on all luxury consumption items.
And what is that?
So get ready for it.
What counts as luxury?
3,000 cc cars, for example.
Oh, okay. And breathing?
and breathing in Lahore.
And Dr. Nabi will not let it happen.
No, we're going through with that.
Yeah.
We're going through with that.
Thank you. Thank you, Dr. Ijaz. I'm going to hand it over to Dr. Roberta, but before that, please keep your phones on silent. It's like 5 times now, to do the, sort of bring all of this really rich discussion to an end, and give us your sort of remarks and what are the key takeaways.
You tend not to ask me the questions because this was a very, very rich discussion. And I'll try to sort of bring it together. Also giving a shout out to a report that is led by my colleague Francisco Unsorge, who was the former chief economist for this region, and it's called Taxing Times. And I thought it was very timely for the type of discussion.
That is an excellent title.
It's a very good
Excellent title. Not my report, and I'm glad that you actually...
I reviewed it.
You reviewed it. Excellent. So just a couple of numbers. So revenues to GDP, you mentioned that 12.2%, which stands at less than half of what we see in the Middle East, North Africa, Afghanistan, and Pakistan region. So the potential is larger. Composition is mostly trade tax, and then next, indirect taxes. You spoke about it, and you spoke about it in terms of fairness, but you also spoke about it in terms of thinking holistically in a context of growth. Now, this is a system that ends up having high tax rates and a small tax base. So when you spoke about squeezing And that's exactly what is happening. Now, if you do some econometrics, which I didn't do, but my colleagues Francisca did, Taxing Times, do read it. It's really a good one. There are some structural factors that account for why it's difficult to collect taxes in Pakistan. One is that there is a large informal sector, and the comment on how difficult it is to have a startup and to make the choice: should I go cash or should I leave? Is really both cause and effect of this existing tax system. So there is a little bit of a vicious circle in terms of the relationship between how taxes are structured and the informal sector. There's also a large agricultural sector, and some of you also spoke about the difficulty and also the willingness to think about taxation in the agri sector. Now, what to do about it? I think we had a discussion at different levels, like big picture and more practical. So there is a lot of scope to make gains on both VAT and personal income taxes. And some of you talked about exemptions and loopholes. So essentially, this is a way to expand the tax base. Then there is a way to improve the administration. And Dr. Sam talked about it, Dr. Rashid talked about it. So this is something that has to do also with innovation and digitization. All of you and also the audience referred to in aligning the incentives between the federal and the provinces. And there is a sort of like externalities in spendings that are not internalized, if you pardon this sort of nerdy talk, that then result in high debt that all of you have indicated as a significant problem. Also because servicing the debt squeezes in how much you can spend for productive public services. The last point there is really, I think, the fundamental one, which is taxation for what? And this is part of the social compact between the state and the citizens, and between this privatization Dr. Ali was talking about of key social services, health and education, when in the end the state remains responsible for that service, defense, and some basic infrastructure. I said what, I'm going to say in one word how, and I think I'm just repeating what Dr. Ali said. Within a framework of growth, within a framework of development, because that's the objective. The objective is not necessarily just raise more taxes. The objective is to grow, and to grow well and in an inclusive way. And one untapped potential, and again, Dr. Ali preceded me, is just something that we have not discussed, but could be beneficial and seems to be what at the World Bank people call a low-hanging fruit. It's an expression I don't like, but I think it applies really well to this, and this is the sin tax. And what's the sin? Pollution. More than 3/4 of the population of Pakistan are exposed to extreme levels of pollution. Mortality from water pollution is high. Globally, in the past 20 years, the revenues from carbon taxes and sin taxes of this type went from 0.1 of GDP to 0.7 of GDP. So Pakistan would not be alone, and this would be like an easy win with very great benefit for the population. So thanks for giving me this opportunity to reflect on these great contributions and great minds. So
Thank you so much, Dr. Roberta. That was an excellent summary of the conversation, and no one could have done it better than you. So thank you very much for this. My apologies for not getting to everyone here, but our panelists are here, so you can just come quickly and circle them and ask them questions very pointedly. Please join me in thanking all the panelists, but also the organizers at CDP, IGC, and LUMS who have helped put this together. Please, round of applause. Thank you.